What's up, guys? Back again with another video. So let's talk about this. So I received a comment and I thought that it was very important because this is the comments people be leaving when you just don't take the time to educate yourself, right? And I felt like it was important because I talk about this all the time. So let's read this comment. It says, "Let me ask you this. All of you truckers in trucking business, do you really need a bank loans or credit to buy used trailers?" Exclamation point with a question mark. If you do, then you are not far away from red zone when you can sink down entire business you put so much in. The industry is not that great at the moment. All right, so that's the comment that was left. Let me explain something to you because first of all, I talk about this all the time. I talk about building your business credit. I talk about your personal credit. You need to put yourself in position to make sure that your business succeeds no matter what. I have one truck, right? I know a lot of guys, they operate their business and they only purchase new equipment once the equipment that they have currently is paid for, right? So for example, if they have one truck, they'll operate that one truck. Once that one truck get paid for, then they go buy another truck. When that truck get paid for, then they go buy another truck. They scale their business very safely. It may be slow or it may take some time, but they scaling it safely because they don't want to put too much on their plate, which is understandable. Other guys, they say, oh, this truck making a lot of money. I'm about to take this money, go finance another truck. That truck making money, about to take this truck, go finance another truck. Now they got 3 truck payments. Some people do it that way. Those are the people that aren't scared. They're taking risk, and sometimes it pay off, sometimes it don't. But at the end of the day, to say that you don't need credit or financing is just don't make no sense to me. When all the people that that you can think of that are successful, that are rich, finance things. Elon Musk, he used a bank loan to buy Twitter. That's on a huge scale. If you see rich people doing these things and on a smaller scale, people are not educated enough to use the bank to purchase things, doesn't make any sense to me. So let me put this trailer purchase into perspective for you because I purchased a trailer. The trailer was $25,000. I'm gonna just put it out there. I paid a premium for it. But the reason why it doesn't matter to me that much is because the trailer is business equipment. It's a tax write-off. It's a tax deduction. And not only is it a tax deduction, the mere fact that I financed the trailer, it doesn't matter. I'm gonna get a $25,000 tax reduction. Some may say you're going to get a little less. Some may say you don't get 100%. I'm not a CPA. Talk to your CPA about your situation, your scenario, okay? Because I'm not a CPA. This is not financial advice. But let's say I'm going to get 100% tax write-off for that trailer. Doesn't matter the interest, all of that. Whatever I pay interest is a tax write-off. So whatever I paid for that trailer, I'm going to get a tax deduction for it, right? I'm going to get a tax deduction for something that I didn't use my own money to buy. Not only that, I used a bank loan to purchase something that's going to make money. So not only am I going to get a $25,000 or whatever, let's say I get 75%. Let's say I'm going to get a tax write-off for something that I financed. Not only that, I am using that trailer every day. It's making money. So that trailer not only is a tax deduction that I'm going to get back, I'm also using that trailer to make money, which I would in return use the money that the trailer's making and pay back the loan. So the trailer, if you think about it, if you was really logical about this trailer was free. I get it. So let's say, you know what? It's a liability because you have a loan on it. If you are negotiating your rates and freight, what is it to me to ask these brokers, look, I got a trailer fee. It's $50. If I break down $50 and I don't work on the weekends, 5 days a week, I only financed this trailer for 2 years, by the way. That's the total price of the trailer right there, monthly basis that I'm getting the money from the brokers to pay for the trailer. So the mere fact that I financed the trailer is really irrelevant because I financed the trailer because I worked on my credit, put myself in position to do so. And not only did I do that, that took no money out of my pocket. Let's talk about that. You're saying that you will be in the red zone because the industry is bad right now, but you took $25,000 out of your cash to go purchase a trailer. You gave up $25,000 in capital when You didn't have to. You gave up $25,000 in capital when you could have financed it and let the trailer pay for itself. So what would make you go more in the red than paying for it cash? Another thing, if you're paying for things cash, you're not technically making money. If you did pay for this trailer cash, you're not making no money. You're not in the clear. You're not in the profits until you get your $25,000 back. You can psych it up, psych your mind and say, yep, I own my trailer outright. I paid for it cash, but you're not making no money. Until you get all of your $25,000 back that it took for you to buy that trailer, you're not making any money yet. You're still on yourself, you know? So keep that in mind. The next example that I want to make when it comes to taxes is that, let's say when it comes to filing taxes, like I said, I'm not a CPA. This is not financial advice. And if your CPA or whoever does your taxes is not telling you this, then my recommendation is you need to find someone else. So this example, I want to say, let's say you make $100,000 for the year. And during that year, you purchased a $50,000 truck and a $50,000 trailer. Easy math. You made $100,000. In that year, you financed a $50,000 truck, a $50,000 trailer. Just for simple math. We're going to make both of these things equal. That means you spent $100,000 and you only made $100,000. But because you financed that $100,000, you still got that $100,000 that you made in the bank. But when you take that $100,000 that you financed to purchase the equipment, which is $50,000 for the truck, $50,000 for the trailer, you took that $50,000 for the trailer, $50,000 for the truck, and you did a tax write-off, tax deduction. The truck weighs way over 6,000 pounds. So let's say, for simple numbers, you got $100,000 in tax credit back. That means your tax liability is zero, and you still have your $100,000 in the bank. Then you take that $50,000 truck, you take that $50,000 trailer, put it on the road, and now that $50,000 truck, $50,000 trailer is bringing in income to pay the loan back on that $100,000 that you just did a tax deduction on. Free money. You still have your $100,000 in the bank that you had in the bank. You had $100,000 in the bank. You could have bought your truck and your trailer cash. Listen, the information that I just gave you just now, people are selling to you. They will be pissed for me giving you this information. And I gave it to you guys for free. So as to comments like this, if you don't really fully understand what's going on, then I'm not sure if you should be a business owner of any kind. Let me know what you guys think in the comment section. Like, subscribe, share. Until next time, see you in the next video.